Hey, this is Chris, and I'm going to be talking about why you need defensive assets in your portfolio, because we often get asked by our clients, why do we even have any defensive assets? We know that shares do better in the long run, so why do you have defensive assets like bonds and gold in your portfolio? Now, first of all, in the short run, there's a really clear reason why you want defensive assets like bonds and gold, and that's because share markets can fall a lot. And they can fall very quickly, and unless you have defensive assets that are providing a bit of a ballast and support in your portfolio, you may not be able to make a profit in the time horizon that you're investing in. So if you're investing for 1 or 2 or 3 or 4 or 5 years even, not having defensive assets may not allow you to earn a positive return. So there's a really valid and obvious reason why you want some gold and bonds, because they'll get you back in the black. For longer term investors, I think it is a valid question why you would want an investment in your portfolio that may only return 3 or 4 or 5% over the long run versus shares which have historically returned more like 9 or 10%. Now, when you're investing for the long run, the one thing you just need to be able to do is stay invested. And you want to be able to stay invested for 30 or 40 or 50 years if you can, because that's when you'll enjoy the real benefit of compounding. And what defensive assets really help you to do is stay invested through those bad times. Because seeing a big 25 or 35, or in the global financial crisis, 50% fall in your share portfolio can lead to a lot of bad behavior. It can lead to you, capitulating and taking money out, or making decisions that are going to have a long-term negative impact on your returns. Whereas having some defensive assets in your portfolio can allow you to stay confidently invested through that time. So really it's a behavioral reason why you want to own defensive assets in the long run. A bit of a hot tip though, investments in defensive assets haven't always gone badly. So for people in Japan over the last 20 or 30 years, Japanese government bonds, which is the most defensive asset they have in that country, have actually performed better than shares. So occasionally there's also scenarios where defensive assets do perform better than shares, which is another great reason why you probably want to own some in your portfolio. I'm really interested to know what amount of defensive assets you own in your portfolio, so please comment below. And if you have any other questions about defensive versus growth assets, please let me know too. If you'd like to see videos that are similar to this, please hit the subscribe button below. I'm posting on this channel twice a week.